Hey everyone, this is Sina with another episode of Into the Bytecode. My guest today is Jake Chervinsky. Jake is the Chief Legal Officer at Variant. He was previously the Chief Policy Officer at the Blockchain Association, which is the largest advocacy group in Washington, D.C. And before that, he was the General Counsel at Compound, which is one of the first DeFi projects in Ethereum and the project that really kicked off the idea of progressive decentralization. So this was a kind of first principles conversation about how the U.S. government and regulations really work. And we talked about how that's changed over time, how crypto played a role in this election with the largest super PAC in the country, how legislation might evolve going forward, and also from the perspective of a founder, how to update our mental models and how we think about architecting new products and protocols going forward. I do want to say that nothing in this conversation is legal advice, and you should talk to your own lawyers. And with that, I hope you enjoy. So I thought as a first place to start, I kind of mentioned this beforehand, that oftentimes I think when you're talking with someone who's been in the field really deeply for a long period of time, it's most interesting to ask the basic questions and hear how you think about things, how you formulate things from first principles. So to kind of start at maybe a ridiculously high level, zoomed out perspective, I'm curious to ask how you would describe how the U.S. government and regulatory machine works. And maybe to ground us, like, let's assume that we're talking, I think a lot of the people who listen to this podcast are maybe more technically oriented builders, founders, people who are really smart, curious, but maybe haven't had the exposure to how this stuff works. And so, even starting as at something as basic as the three branches of government, but working into, how rulemaking works, how the Chevron deference works, like some of these things that are actually like pretty relevant to what's going on today. I'm really curious how you would talk about that.
Awesome. I love this question, and thanks for having me on. So let me try to put together 8th grade civics and a little bit of intro to law in law school as well. So at the very highest level, we have a federal government in the United States, and then we have state governments in all 50 states, and then we have local governments in each of those states. And different types of laws get handled at each of those different levels. I think for this conversation, let's focus on the federal government, since that's what's top of mind and frankly, most important for crypto, although state law is quite important too, so we can touch on that as well. So first of all, the federal government is structured by the highest law of the land, the United States Constitution, right, which sets out in a number of different articles what the structure of the government is. And then also in a number of amendments, the Bill of Rights and the other amendments that came after that, protections for various individual rights, like the First Amendment protection for freedom of speech, or the Fourth Amendment protection for privacy, and a number of other changes to the original document, the Constitution, as the founders wrote it back in the 18th century. And the Constitution establishes a federal government, as you said, with three branches of government: the executive, the legislature, and the judiciary. So let me break down a little bit what those three are. The executive is basically the president and his or her administration. So that means the White House, and then all the people who work in the White House and the various councils that the White House sets up, like the National Economic Council or the National Security Council. And then also in the executive are all of the federal agencies. So that's the Securities and Exchange Commission, the SEC, the Commodity Futures Trading Commission, the CFTC, all of the departments, right? The Department of Justice and the Department of Agriculture and the Department of Commerce, and the list goes on and on and on. And then also various independent agencies, So like the Federal Reserve, for example, is part of the executive branch, but also is supposed to have some independence from whoever is in charge at any given time, right? The president isn't supposed to be able to just command the Federal Reserve and some of the other independent agencies like the president can, the SEC or some others like that. Although even with the SEC, there's some exceptions there. So that's the executive branch, right? The president and all of the people who work for the president and in those different agencies. The job of the executive branch, essentially, is to enforce the law, right? To enforce the law. And then the question is, okay, what law, right? Where does the law come from? And the law comes from the legislature, right? The legislative branch of the federal government, which is Congress, and the two chambers of Congress, the House of Representatives and the Senate. And without getting too deep into the weeds, right, there's 435 members of the House of Representatives. They get elected in districts across the country, and any given state will have a various different number of districts. The smallest states by population have only one district, meaning they have only one person in the House of Representatives. And, the very largest, like California, can have, 50 or more representatives. And the representatives are apportioned by population across the country. The Senate, on the other hand, is just 2 senators per state, end of conversation. And those get elected as statewide representatives. So the senators are the senators from the Commonwealth of Virginia or the state of California or the state of Wyoming. And no matter how many people there are in the state, you get 2 senators. And the job of Congress, like I said, is to pass laws. And those laws are often referred to as federal statutes. They go into the United States Code, the U.S. Code, USC. And that is all of the federal statutes that govern how the law should work in the U.S. And we could do the whole, how does a bill become a law? Although maybe we'll save that for a little bit later. Very complicated and arcane process, hard to understand. But that's the legislative branch. And then lastly, you have the judiciary, which are the federal courts. And the job of the federal courts is to interpret the law, right? To sort of understand when Congress is maybe unclear about what a law means, or there's some dispute between different parties about what the law is. It's the job of the judiciary to interpret the law and decide the sort of answers to those tougher questions. And the way the judiciary is structured is essentially at 3 different levels. At the lowest level, you have the federal district courts. Those are the trial courts. And every state has at least one, and some states have as many as 4. So this is like the U.S. District Court for the Southern District of New York, or for the Central District of California, or things like that. And basically every dispute, with a couple exceptions as always, begins in a trial court in one of the U.S. district courts, right? This is where you can think of people having trials, right? There's a jury trial, witnesses are testifying, evidence is being offered, juries are making decisions and giving verdicts, things like that. Above the district courts, you have the appellate courts, right? The U.S. Circuit Courts of Appeal. And there are 12 different circuits in the United States that cover different states. So you might have, 7 different district courts that feed up to one particular circuit court. And the job of the appellate courts is to hear appeals, right? So something happens in the district court, a judge makes a decision about a given legal issue. The parties to the case say, that is not correct. We're going to appeal this issue and argue it up to the appellate court. And the appellate court gets to oversee and review those district court opinions. And then, of course, sitting above the appellate courts is the highest court in the land, the United States Supreme Court, with its 9 justices who get the final say over all of these different legal issues. So let me add one more bit of complexity, and then I'll stop, explaining the federal government. In addition to the United States Code, so when it comes to what is the law, there is also rulemaking authority that the executive branch has that is essentially delegated to it by the legislature. So because Congress is, pretty slow to pass laws, and because the, 535 members of Congress can't be arguing about every little tiny nitpicky issue, often what Congress will do is it will pass a law, and the law will establish a general framework for what the law is or what some set of regulations should be. but then it delegates authority to an agency to do rulemaking, right? To basically fill up the details of what that framework is going to be. So the SEC, for example, is established by the Securities and Exchange Act of 1934, which says in general what the SEC is and what its mission is supposed to be, but also gives the SEC the authority to write its own rules. And when the SEC or some other agency writes its own rules, those rules are what we refer to as regulations. So you'll often hear people say laws and regulations. In general, the laws are federal statutes in the United States Code. The regulations are these rules passed by the agencies that go into the Code of Federal Regulations, the CFR. And that's sort of the body of law, in addition to all those court cases, those judicial opinions that judges are writing, that lawyers like me then have to look at to figure out, okay, what do all these laws and regulations actually mean? So let me stop there, but curious what part of that you want to dig into more.
That's a very good overview. It's almost like the best I've ever heard. Thanks for laying it out. Maybe before we take this in more of a crypto direction, I think one topic that maybe has prompted more people to think about how this machinery works is the new administration, and in particular, DOGE, that Elon and Vivek Ramaswamy are working on, and the Department of Government Efficiency, and the reading the piece that they wrote in the Washington Post, I think it was, where they kind of outline how they're going to approach reforming and refactoring regulation. They kind of talk about this distinction between laws put forth by Congress and maybe rulemaking that's been done by these federal agencies. Also, which folks who kind of like have input into this process have been elected by the people versus like appointed. Maybe kind of using this as a lens on, putting some finer points on how this works. How would you interpret what they're setting out to do with DOGE, or what they're saying that they're planning to do?
Right. So let me separate the DOGE from maybe the philosophical question about how the government works. The thing I'll say about the DOGE, and maybe I'll come back to this, is it's not a real department, right? So there is no Department of Government Efficiency established by the Constitution or by any other federal law, right? Congress hasn't created such a thing. Neither has the executive branch through executive order or any other means. So at least for now, the DOGE is kind of just a group of people having some thoughts that might advise the administration once it takes power. And we'll have to see going forward what actual power is vested in the DOGE, or if it's more just going to be an advisory body that tries to tell the Trump administration, here are ways that you can address this problem of what I'll call the deep state, although there's a lot behind that term. But maybe that gets us to the sort of philosophical question, which is, there's a difference of opinion about how powerful the executive branch should be at any given moment, and how much of the government should be sort of established, and you could use the term institutional, right? And there are trade-offs between these two things. The idea of the DOGE, and I think an idea the Trump administration has pressed quite a lot, is the idea that the president should really be in charge of everything going on in the government. And I think that from almost a Silicon Valley type perspective, right, you do want the government to be efficient, and efficiency requires a lot of centralized control. And it's problematic as the president when your government is doing all sorts of stuff that don't answer to your priorities that were maybe established in the last administration, or the one before that, or the one before that. And then the other problem is the one that you mentioned, is whether or not the government is actually representing the people. So the idea, of course, of a democracy and of the republic that the Constitution sets up is government of the people, by the people, for the people, right? At the end of the day, this is self-governance. It's an experiment in self-governance. And the experiment has perhaps gone a little bit awry in that so much policy is getting established by people who the public never voted for. And this is a problem that listeners will understand very well just by thinking about Gary Gensler, who's been a thorn in our side for the last 3 or 4 years. No American voted for Gary Gensler, not a single person, right? The American people voted for Joe Biden to be president, and Joe Biden decided that he was going to nominate Gary Gensler. And then the United States Senate confirmed Gary Gensler, but no one voted for him directly. And so no one voted for the policies that he put forward. And I would argue if the American people were voting for an SEC chair, they would not vote for Gary Gensler, right? They would vote for someone who has a very different perspective on what the SEC should be doing. And this issue goes across all of the federal government. And the lower you go at these agencies, right, the less representative the officials are and the less accountable they are to the American people. So with Gary Gensler, at least there was this process of the senators who we voted for giving a thumbs up or a thumbs down to him as a nominee. And we've just seen with the Trump administration, some nominees that he put forward that the Senate basically said, we're not going to approve this person, so you got to pick somebody else. So there's at least some accountability there. But at the levels below that, and continuing the SEC example, you have a director of the Division of Enforcement. And that person for the last few years was Gurbir Grewal, who no one voted for, and also the Senate did not confirm. This was just someone picked by Gary Gensler. And so much of the policy of the SEC was set not by, Joe Biden who picked Gary Gensler, or Gary Gensler who picked Gurbir Grewal, but was set by Gurbir Grewal himself. This entire issue of regulation by enforcement was really implemented by him. And so you have this problem of a government that is not accountable to or responsible to the American people. And circling all the way back to the DOGE, I think the purpose of the DOGE is, and correct me if I'm wrong from the article that they wrote, but sort of twofold. One literally is, how do we make this government work better by clearing out some of the, sort of extra employees who don't really need to be there, but are there for, reasons of basically, let's call it government debt, right? Not the dollars we owe, but just the sort of buildup of issues that haven't ever been solved because no one was looking at addressing waste and abuse in government. And secondly, it's how do we make the government more responsive to the people? And specifically in their mind, I think what that means is making the government more responsive to what the president wants and what his administration wants at that time. And the last thing I'll say, and then I'll stop going on about this, is there are trade-offs here, right? And the trade-offs are exactly the same as the trade-offs we have to engage with in crypto every day, which is a trade-off between centralization and decentralization, right? There are benefits to centralization. It's faster and it's more efficient, but it's also more risky, right? And what we are doing in crypto is building decentralized systems that in many ways are intentionally slower and more expensive and less efficient, but also more secure and more reliable and more transparent. And you always have to worry, and this is why the founders set up the Constitution the way that they did, intentionally building a government that was going to be pretty slow to respond to some issues to make sure there wasn't going to be a king, right? The reason that we have this democracy in the first place, who could just say, this is how it's going to be. Everyone has to follow my orders, whether, my orders are in the interest of the American people or not. So it's going to be really interesting to see how those issues and that trade-off plays out.
Yeah, that's exactly where I was thinking of going next as you were talking, which is, maybe thinking about the fact that we are designing kind of decentralized, governance essentially, right? And potentially with the direction that things are going in now with the DUNA, the Decentralized Unincorporated Nonprofit Association.
Yes, you got it.
Which we'll get into more of the details of. But I think one thing that promises is that we can have these decentralized protocols and public goods that basically get to design their own governance bodies and kind of employ and compensate people for serving certain administrative functions for this network in much a similar way to how the U.S. government is doing. So, like purely from a governance design perspective and like the trade-offs that are here, between centralization and efficiency and, decentralization and, credible neutrality, how reliable and robust the system is. How do you think about this? Like, as you've spent time thinking about this over the years, are there, how do you think about the design space here? Are there different kind of points in the spectrum that you think are good potential options? Are there, different good ways to structure this that are, kind of equivalent, they're all on the Pareto optimal frontier, but kind of just make different sets of trade-offs? Like, how do you think about this?
It's such a great question, and I've been thinking about this for many years. And for listeners who don't know, I was general counsel at Compound Labs when we designed and distributed the Compound Governance Token. And so back then, we really viewed that as an experiment in decentralized governance, right? In what DAOs can be. And I think we've learned so much as a community since then. I think a lot of people have sort of given up on DAOs, and I'm not one of those people, right? I think that what we've created here is a new way for humans to coordinate at a distance on the internet in a really meaningful way. And I think the failure of many DAOs, and I think we should be honest about that, right? Many experiments in decentralized governance have come back essentially as a failure, or at least we've rejected the hypothesis that decentralized governance was going to lead to a better managed system, or to better incentive alignment, or to more participation among users in the system. I don't think that means that there is no value to decentralized governance. And I think the conversation we were just having is case in point there, right? The American government is an experiment in decentralized governance. We call it the American experiment because we don't know if it's going to work or not. And I think we're all still trying to figure out, how can we as people set up systems where there is broader participation and where you address the asymmetry between those in power and those people are trying to govern or trying to order around. And I do think there are ways that we can do that effectively in crypto. I think, as to your point, there is sort of different points on the spectrum that make sense for different types of projects. And in many cases, I think what we've learned is centralization is the right way to go. And I think you have to consider everything here as a trade-off. And again, the trade-off is sort of between how efficient, how effective, how fast, how cheap do you want to be versus how secure, stable, resilient, transparent do you want to be. And when we're talking about, the base layer of the protocols that we're working on, right? The Bitcoin protocol, the Ethereum protocol, et cetera. There, I think we should prioritize credible neutrality. It's so important there. If we don't have it there, we won't have it anywhere. And we often refer to this as base layer neutrality. And I think we have to respect that, both as a matter of the technology and governance, and also as a matter of law and regulations. That's something that we're, arguing with policymakers about all the time. I think the higher up the stack you move, the less necessary it is to have decentralization. And I think the way that you address those risks of centralization is basically through disclosure, right? Through honesty, through making sure that the person who decides to use the protocol knows what they're getting themselves into, but that they are empowered to make their own decisions about what risks they're willing to take, right? So again, I think as you get more toward layer twos or toward consumer-facing applications, or front-end interfaces, or custodial intermediaries and things like that, centralization is fine. We just have to make sure that those actors who have outsized power in that system, outsized influence in that system, are good actors, and that we have some way to hold them to account. I think crypto allows us to do that. I guess the last thing I'd say, and a little bit off of this sort of spectrum from most centralized to most decentralized, is again the ways in which we can use this technology to coordinate in ways that we just couldn't before. And I really do think that's the sort of like borderless magic of this internet money, right? I think 50 years ago, it would have been laughable, maybe even 20 years ago, 10 years ago, laughable to consider having an enterprise where people from totally different geographies who otherwise would never be able to communicate with each other can come together with some joint mission and some joint purpose and then carry that forward. You just couldn't do that with the traditional financial system. The friction of trying to make that work is just too high. In exactly the same way that the friction of even communicating would have been much too high before the internet. And so I think we should leave open the possibility that not even necessarily in the concept of decentralized governance, but just when we think about what DAOs are and how powerful they can be, connecting people across borders and giving them this technology that allows them to communicate at light speed, not just information, but also value, is extraordinarily powerful. And I think that is going to be world changing in the end.
Yeah. I think this is something that all of us have intuited from the beginning, but there's almost a craft associated with keeping one's optimism as the years go on, because you kind of inevitably meet all the roadblocks and the obstacles. And it's kind of a case of things both take longer than one expects, but also ultimately are happening on pretty fast timelines. Like what you said is completely true, that 20 years ago, this wasn't possible at all. So it's really helpful, I think, especially as one spends more and more time in kind of in a technology area to reground yourself into the first principles of what you believe in, and kind of like prevent your view from getting clouded by just, seeing attempt after attempt kind of fall short and like kind of becoming jaded without realizing it.
I totally agree. And I think it's incumbent on us to stay optimistic and stay grounded in first principles, right? And I think as a technologist, I try to do that by staying in touch with how other technologies have developed. And I feel like as a society, we memory hole the early days of any given technology. But my favorite example, I guess, because I think it resonates with most people, is the automobile, right? Cars are just taken for granted now. Someday, before long, self-driving cars will be taken for granted. The idea that we were, using steering wheels and brakes and accelerators will be totally crazy. But when you look at the earliest days of the automobile, it was literally insane to think that it would be anything other than a toy, right? They were totally inefficient. They were slower than horses. They broke down all the time. They were extremely expensive. They were toys for rich people. And it just took a little bit of ingenuity on the part of builders and I want to say vision, right? To just imagine what an automobile could be that got that industry there. And now we've all forgotten what that experience was like, but it actually took several decades to get there. And you can tell the same story about basically any technology, right? It takes a long time. And then everyone, says, oh, it'll never happen. This will never be a real thing. And then before long, everyone's saying, well, obviously that was going to take over the world. No one ever could have doubted it. And I think we're just in the middle of that experience now when it comes to crypto.
Yeah, totally. Okay, so maybe to ask another ridiculously big question is taking that framework that you laid out about, Congress, the executive branch, the courts, and applying that to crypto, and maybe taking the historical lens and the story of how this has evolved with respect to crypto. So in 2009, Bitcoin comes out. It's this weird cypherpunk protocol. No one really cares about it. Fast forward some period of years, you're working on Compound, one of the first money market protocols on Ethereum. Fast forward to 2024, we're here, crypto is like a much bigger topic of interest in the world more broadly. And through this period of time, there's been this question of how does the existing governance machinery and sets of rules set forth by the SEC, the CFTC, other parties kind of like applies as puzzles fitting into this new, technology and movement that, hasn't had a precedent before and is kind of net new. So how would you describe, how this dance between these two things has played out over time? And where are we today in that longer arc?
Yeah. So let me start, since it's a broad question at the highest level, and then we can drill down into how it's going with crypto right now. And I'm glad I gave the example of the automobile, because in so many ways, how law is addressing crypto is similar to how law addressed the automobile and every other new technology, which is to say, laws are designed for the status quo for the most part, right? There's some very high level principles like the Bill of Rights that we were talking about, some individual rights that are supposed to be durable no matter what happens, no matter what the technology is. But when you get into the level of federal statutes and regulations and state laws, these laws are designed for the world as it is when the law is passed. So when the automobile came out, right, there were no rules about how automobiles should share the road with horses. And you combine the fact that the laws are not designed for this new technology with the skepticism and the fear that most people have about most new technologies, and you end up with some pretty weird results, right? And in the case of the automobile, you got these things called red flag laws. Maybe you've heard of this. There were these laws passed that basically said, automobiles are so dangerous that they might kill people just by being on the road, that every automobile must have a human being waving a red flag walking in front of the automobile. And the automobile must not drive faster than that person can walk in front of the car. This happened in the United Kingdom, not in the United States.
No way.
And
That's
it's
crazy.
obviously totally crazy, but I think it's the best example to explain how law reacts to new technology in general. And you see the same kind of pattern over and over with all types of technology. So, okay, let's bring this down to the level of crypto. Crypto challenges the status quo in many ways, but let's say two main ways. One is with the beginning of Bitcoin as money, right? And this is the typical dichotomy, right? There's sort of money crypto, and then secondly, there's tech crypto. So the way in which Bitcoin is non-sovereign, decentralized, uncontrollable, permissionless money that is also digital doesn't make any sense under current law, right? Bitcoin enters the scene when monetary policy essentially assumes that governments are in control of the money supply, and that all transactions that occur at a distance, in other words, all transactions that are not cash transactions, where I can hand you a dollar bill or a gold coin in person, all digital transactions must take place through intermediaries like banks or money transmitters. And the government gets to regulate those intermediaries, which are sort of like choke points that they can use to surveil all financial transactions. And by 2009, the Bank Secrecy Act, which many people will have heard of, which is this anti-money laundering and counter-terrorist financing law that basically establishes financial surveillance for the whole traditional financial system, was very well established, and law enforcement had come to rely on it a lot in order to do their job of detecting and prosecuting illicit activity, right? Then you get Bitcoin. Bitcoin cannot be stopped. You don't need to, give someone your passport and your home address and social security number to use it. If you have an internet connection, you can send it to anyone you want to, and it's pseudonymous, although not anonymous. And governments really did not understand, and still to this day do not understand, how to deal with that new type of digital gold, right? A digital currency that they do not control and that is much more difficult for them to surveil. So we're sort of playing out those issues on the money side of crypto for starters. On the tech side of crypto, you have a government that is, in general, pretty skeptical of technology. And we see this play out in a number of different ways. But the best example, I think, is with the tech giants and the social media companies, right? Where technology is a threat to the status quo in general, and governments don't really like threats to the status quo. And so they view all these other use cases of smart contract protocols and a decentralized base layer for all types of different applications as a threat to the way that they've done business for a long time. And that's true in DeFi as much as it is for all other types of NFTs and consumer applications. And so you see governments sort of reckoning with this question. We understand pretty well how to drag Mark Zuckerberg into a congressional hearing or, pass laws and regulations that tell Facebook or Twitter or, some other type of company, right, Meta or X, what they should do. Government is still struggling to understand, how do we regulate something like Ethereum, or do we even have the authority to do that? So we can dig way deeper into that, but let me sort of stop there and curious for your reaction.
Yeah, I think it's a perfect framing of the question. Like, it almost begs the question of like how, assuming the perfect government, like how would you even react to something like Bitcoin when it comes out? Because it's so out of left field and inverts what you're able to do and not able to do.
Totally. And I think that's exactly the right question. How do they react? And the way they react, I think, is in many ways the same as most reactions to new technology. And this is sort of a cliche, but right, first they ignore it. And that's definitely what happened with Bitcoin, right? 2009, 2010, 2011, 2012. People are just like, this is some dumb internet fad. This is going to disappear. We don't have to pay any attention to that, right? Then they laugh at it, right? And I think that started happening pretty quickly. And as you look outside Bitcoin to, Ethereum and other smart contract platforms, there's been a lot of people who've done a lot of laughing at things like, NFTs and stuff like that, right? Then they fight it. And I think we're really deep into the fighting stage right now. And there were a few different events that happened, and maybe we'll get a little more into the weeds
Yeah,
here.
let's do it.
So, first obviously was the Silk Road. And the Silk Road really put Bitcoin on the map, and obviously not in a positive way in the eyes of government. Bitcoin was viewed as a tool for criminals to carry out illicit activity they would not be able to carry out through the traditional financial system, right? And, the founder of the Silk Road, Russ Ulbricht, is still in prison to this day. He's been in prison for 11 years for creating this platform that allowed things like the sale of controlled substances, right? Drugs and, other services that were viewed as criminal. Then you sort of fast forward and you get to the 2017 ICO bubble. And there was definitely some laughing that went on there, but the fighting and the way that put Ethereum and other smart contract platforms on the map was frankly the amount of fraud that happened during the ICO bubble, right? All of a sudden, anyone, anywhere in the world could come up with any scheme they wanted and then lie about it and sell it to an unsuspecting retail public. And there was a lot of that. And that's when the securities laws started to get involved here, right? The question of how do we regulate the offer and sale of digital assets? So in 2017, the ICO bubble really caused the beginning of a big part of this fight. And then I think more recently, FTX. And really, it's impossible to overstate the negative impact that FTX had on crypto policy in Washington, D.C. and around the world. Because again, FTX was frankly not even a crypto issue. It was just a fraud, right? It was just this guy, Sam Bankman-Fried, who decided to steal a whole lot of people's money. And the way that he did that was by abusing crypto as a marketing scheme to take custody of people's money that he could then steal. But it's been very difficult to explain to policymakers the difference between a centralized financial institution that takes custody of people's money versus a decentralized, permissionless, open protocol that allows users to interact with each other in a peer-to-peer fashion over the internet. But that's sort of where we find ourselves now, in this position where governments understand crypto's not going anywhere, right? After FTX, there was sort of a view, this is the end of crypto. It's just going to sort of disappear on its own now. It's, the fad has run its course and it's going to go away. And clearly we've demonstrated that this technology is here to stay. So governments want to figure out, how do we regulate this? How do we address the risks? And how do we take advantage of the opportunities? Although, different policymakers weight differently how much risk there is versus how much opportunity there is. And then the other really big question is the one that goes back to the Silk Road and runs through things like the Lazarus Group, which is the hacking group out of North Korea, funding the North Korean missile program by exfiltrating funds out of DeFi protocols, right? How do we address the illicit finance and national security risks of these permissionless protocols that we can't surveil and censor and shut down in the way that we can in the traditional financial system?
Yeah. The Lazarus Group is wild, like learning about some of the hacks they've done and how, you have open source protocols holding hundreds of millions of dollars, and they're the perfect kind of attack target. And thinking about FTX too is always interesting because it's almost like the most ironic possible thing that could happen, where you have a centralized institution that fails for the reasons that centralized institutions fail, and it's interpreted as the opposite of what it implies. And it's cool to kind of see us turning the page on all of that slowly. Into the Bytecode is sponsored by Splits. Are you tired of sacrificing security for usability? Splits believes it's still way too hard for teams to self-custody their on-chain assets. They're building a new kind of internet-native bank on top of Ethereum. Splits makes it easy for teams to manage the whole lifecycle of their finances, from structuring revenue-sharing agreements, using payment flows like splits and waterfalls, to managing those earnings once you receive them, using passkeys and smart accounts. Splits is being used by teams like Protocol Guild, Zora, Songcamp, and others. I'm a big believer in them and recommend checking them out. You can learn more at splits.org. Maybe so kind of thinking about this, there's obviously a real merit to things that the government must do here, right? Like thinking about the ICO bubble and all of the scams. Like even today, there's no shortage of, unscrupulous bad actors in the ecosystem. But on the other hand, when we kind of look at, how the SEC and different bodies have interfaced with crypto, it feels that it hasn't been done in good faith, in the interest of getting the best possible outcome for, the technology, the people of this country, just generally like optimizing for the best outcome. Why has that been the case? And maybe that goes into some of the incentive structures or the specific people involved. And there's always, the particularities that matter. And I feel like if we zoom out and look at other technologies like AI right now, we kind of see some of the same battles playing out with like regulatory capture, like closed source versus open source, like all these sorts of things. So what are some of the nuances when it comes to like these, bigger philosophies getting put into action concretely that sway what actually happens?
Right. Well, so like any complex issue, I think there are a lot of different answers, and it's not any one of them. It's a mix of all of them. So let me give you a few of them. And some of them are philosophical and some of them are practical, but starting with the philosophical side of it. At core, there is an argument about whether decentralization is even a good thing or not, right? So if you think about the perspective of a regulator, who is very used to the traditional financial system, is very used to looking at intermediaries and frankly, looking at them as good actors, right? The ones who are enabling products and services for the world, you might take the perspective that decentralization is actually bad and that you want to have a centralized system for all the reasons we've discussed, right? More efficient, faster, cheaper, and all of those things. And what you might say is the solution to these risks that we in crypto have identified, the solution is just to regulate more effectively, right? To make sure the banks are being honest and to stop the banks from taking advantage of their own customers. The answer is not to throw out the whole concept of centralization. And so there is a perspective among some policymakers that crypto, even in our best ideal of what it could be, is the wrong path forward. And the purpose of the government is to stop it from happening, right? And in the context of
that decentralization itself is not a good thing.
Exactly right. Exactly right. And you can find speeches from, one example is there was a CFTC commissioner, Dan Berkovitz, who ended up moving over to the SEC to work as counsel for Gary Gensler, who gave this speech. And the topic of this speech basically was decentralization is bad. Intermediaries are good. This is why we want intermediaries in the financial system, right? Sort of a mind-blowing perspective for those of us who believe that decentralization is the way to solve many of the problems that the traditional financial system has created, and that reliance on trusted third parties inevitably will always create. But that's sort of the philosophical beginnings of it. Then there's sort of the view that there's just not a lot of value in crypto. And so there's no reason why government should spend a lot of time working on these issues to begin with. Crypto's just going to go away on its own. And so why should we bother coming up with regulatory frameworks for this random technology that isn't really going to go anywhere? So that perspective has been more of an issue in terms of allocation of resources than how do we figure out these tough problems. And indeed, the problems are very difficult, right? It is very hard to understand something like, how do we make sure that DeFi developers only launch protocols that are not vulnerable to being hacked by the Lazarus group, right? No one has any kind of good answer to that question. So it's really hard to figure out, how do you create a good incentive structure and how do you regulate this kind of stuff? Much easier to just throw up your hands and say, I'm going to go work on something else and hope that this problem solves itself by disappearing. So that's sort of, the other philosophical perspective that's been an issue. Then practically speaking, I think a couple problems. One you just mentioned, which is regulatory capture, right? So sometimes, and I don't want to throw around accusations, but you have regulators who come from the traditional financial system. And when they are in their position in government, it's a time-limited position that they've taken, right? They're going to do 3 to 5 years in government. They're going to get paid way less when they're in government. And the purpose of them doing it is to get this experience so that they can go through the revolving door and go straight back to whatever company, right, bank or financial institution or social media company or what have you, that they were working at before. You see this all across every industry in America, right? From the pharmaceutical industry to the oil and gas industry, right? This happens everywhere. And so there isn't really a practical incentive for those regulators to come up with a framework that will advance the interests of innovation and disruption of the company that they're trying to, go back and get a big bonus and a lot of equity and, make a ton of money at. So that's really a practical issue. And then I guess lastly, you just have the extraordinary difficulty of getting anything done in Washington, D.C. Like, even when everyone agrees that something should get done, nonetheless, it is almost impossible to get anything done. And going back to the beginning of our conversation, in many ways, this is by design, right? Our government is set up to be inefficient in many ways so that things will happen slowly so that we don't overcorrect when some new event occurs or some new technology arises. And crypto's only really been a thing for, how many years would you say crypto's really been a thing? Like 6, 7 years maybe? Mm-hmm. So it's just going to take a long time, right? A lot longer than that. And I think if not for FTX, we'd have much healthier conversations. But FTX really deranged the conversation in DC, not just because of what it was, but because of how active Sam Bankman-Fried himself was in politics and in policy, which caused a lot of people to sort of recoil and decide they didn't want to touch this industry with a 10-foot pole.
Mm-hmm. Yeah, someone needs to tell the inside story of like what happened there at some point in time. I am actually curious to ask you about how do things happen in DC? And, one maybe cut at this is that if we look at the recent election, it feels like it was a case of the crypto ecosystem kind of mobilizing and making a case for its interests, right? And this was done through some of the funding that groups like Fairshake and other folks did. It feels like just more people were engaged with policy this time around. but I'm curious how this kind of like high level thing connects with who's actually put into positions of influence and how policy takes shape.
Yeah, so great question.
And also, I mean, this is, you've been deep in this problem with the DeFi Education Fund and other things over the years too. So I feel like it's interesting to ask you.
Definitely. So yeah, and for those who don't know, I'm on the board of the DeFi Education Fund, a nonprofit created by Uniswap Governance, which is focused on advocating for DeFi policy. I also, before I started at Variant, was head of policy for the Blockchain Association, which is the industry's main trade group in DC. So I spent a couple years there, banging my head against the wall in the halls of Congress, and trying to figure out what we could get done. So let me separate this also into two different questions. One is, how do we as an industry influence the people who are in power, and how does that get decided? And then secondly, once those people are in their roles, how do we get things done in DC? So first of all, crypto was much more influential in this election than we've ever been before. And, typically you would imagine crypto, a special interest, as being not particularly active or influential in politics. But the first question, as I said, is who's going to be in power and in a position to actually get something done? And this year and the last couple years, the industry realizing how important it was to have people with a pro-innovation, right, pro-business, pro-crypto perspective in positions of power, decided to get really active in politics. And we did that as an industry in a couple of different ways. The first was by advocating, right? By literally telling the story in as effective a way as possible, why crypto is good for the American economy and for our national interest, right? And I think there's a very strong story behind that, but you have to tell policymakers why what we're up to is actually good for America so that they can take that argument to their constituency, right, in order to get votes. So that was the first thing we did, right? Issue advocacy, why this is something that will win candidates votes. The other thing is we got active in political giving, right, in campaign contributions. And that's sort of the second thing that candidates for office care about is money, right? They need money in order to run campaigns, in order to win elections. And part of that was individual contributions directly to candidates, right? This is often described as small dollar donations, although, it also took the form of fundraisers where, the candidate would come and talk to folks who are active in political giving, and then folks would make, contributions up to the limit, which I think was $6,600, something like that for this cycle. And candidates raised a lot of money in that way. It also included something called a super PAC, right? For those who've heard this term but don't know what it is, a super PAC is an organization that is not allowed to explicitly support a particular candidate, but can engage in issue advocacy, right? And because of this distinction between campaigning for a particular person versus advocating on a specific issue, the campaign finance laws allow super PACs to raise basically an unlimited amount of dollars from their donors. And this election cycle, the crypto industry set up its own super PAC called Fair Shake PAC. And Fair Shake PAC raised at one point, I think, $200 million and was the single largest super PAC in all of America for this election cycle. And Fair Shake put those dollars to work extremely effectively, right? They would back candidates who took a pro-crypto position, whether they were Democrats or Republicans. And so the combination of all of this, us arguing why crypto is good for America and then putting dollars behind candidates who supported crypto resulted in an extraordinary win for crypto this election. So, we have a president-elect Trump who decided to make crypto part of his national presidential platform, right? Crypto was not on the radar in presidential politics until Donald Trump decided to put it on the map. And then also a Republican sweep in Congress. And, Republicans traditionally more pro-crypto than Democrats for reasons we could discuss, but also a lot of pro-crypto Democrats got elected in both the House and in the Senate. So we've done a really great job of putting people in power who, unlike Gary Gensler and the politicians who backed him, like Senator Elizabeth Warren and many others, are going to be open to the idea and motivated to pursue good regulation that helps the industry thrive in the United States. So that's the first question. Let me sort of stop there before we move on to like, how do we actually get stuff done? Because I'm curious if any thoughts there.
No, that makes a lot of sense. I think let's dig into the second portion of it, and maybe we can tie this into the DUNA, because I think it would be something worthwhile to talk about, which is a kind of new framework for how, founders can think about building crypto protocols. And maybe we can, kind of use that as an example of how laws actually move for laws or regulations. I mean, you can disambiguate what the right framing is here, but how something like this goes from theory to practice.
For sure. That sounds great. And the DUNA is a creation of the Wyoming state legislature, but the process is
very different.
Well, different set of laws because it's state law, but the process really very similar to what's going to happen at the federal level. So I think that's a great example. And let me save that for the end. So what we want to do in DC over the next couple of years, given how pro-crypto so many different people in government are going to be, is achieve the most durable policy possible. And this goes back to our conversation before about how responsive government should be to the people in power at that moment. And the worst thing that could happen to the industry now is that we spend the next couple of years, fighting with each other, not really clear about what we want to get done. Nothing real gets done. Then someone gets elected who is anti-crypto, and all of a sudden everything shifts and they get to take over entirely again. So what we want to do is create durable policy that will persist throughout, the next administration and going forward. How do we do that? The answer is we get laws passed in Congress, right? There's a lot of other things we're going to try to do in the next couple of years, right? There's executive orders that President Trump can simply write on his own. No one can stop him. No one can check him. He can just say and do whatever he wants in an executive order. But there's only so much you can do by an executive order. Similarly, we can get guidance or interpretive letters from the agencies. So the SEC could put out new guidance that explains what it thinks about the securities laws and how they apply to digital assets. All we need for that is a chair of the SEC who has a pro-crypto stance, and we're likely to get that in the nominee for SEC Chair, Paul Atkins, who all signs indicate will get through a Senate confirmation pretty quickly. We also can get rulemaking done, right? So we talked about how the agencies get to establish their own rules. The SEC or the CFTC or other agencies can do rulemaking. Rulemaking is somewhat more durable. It requires a public process. It has to comply with various rules set out in the Administrative Procedures Act. It's not so easy for another agency to just undo immediately. But the next agency can undo rulemaking with more rulemaking. So that's also not as durable as Congress passing a law. And when Congress passes a law, the reality is it is very rare for Congress to go back and revisit that law. So if we are able to get congressional legislation on important regulatory issues, it is very likely that we will benefit from that clarity for a very long time going forward. And frankly, that's all we've ever wanted in the industry, is a set of rules that are coherent, that we can build products and services understanding that they will comply with those laws and regulations. The last thing I'll say, and we can dig into any of this more if you want, is what those priorities are right now at the federal level. And right now, there's really two main priorities to get done first and foremost. One is stablecoin legislation. And the reason for this is because it seems that centralized stablecoins have really achieved product market fit, right? It is very obvious that dollars on a blockchain are better than dollars in the traditional banking system. And everyone wants to use stablecoins. And so there's been a lot of work done on some legislation that establishes the basic regulatory requirements for stablecoins, right? Who can issue them? what types of assets need to be held to ensure that those dollars on the blockchain are actually backed by real dollars or, treasury bonds or something else being held in reserve. What types of redemption or creation requirements are there, right? All these types of rules and regulations. I think we're going to be able to get that done in the next couple of years. The second area that we want to get clarity on is market structure legislation. And by that, what we mean is, what are the rules around sales of digital assets, right? The ICO question: how does someone who wants to create a token and put it out into the world, how can they do that in compliance with the securities laws? And then secondly, how do we regulate the intermediaries in the crypto market, right? The Coinbase or Kraken or Binance or Bitstamp of the world, the Anchorage, right? The custodians or the dealers and the brokers, these types of entities that would be regulated if digital assets were securities, because indeed they do have outsized power in the centralized crypto market. And there is some justification to say, if you are responsible for making these types of decisions on behalf of your customers, holding their funds like FTX did, it's appropriate for you to be regulated. So market structure legislation is the second sort of big thing that we want to get done. Now, you mentioned the DUNA. How did the DUNA get done? Very much through the same type of process in the state of Wyoming. The state of Wyoming, very pro-crypto legislature for a very long time. They really understand the benefit of this technology. And the state of Wyoming wanted to become, and still wants to be, essentially the Delaware of crypto, right? So like everyone in the world who wants to incorporate a corporation goes to Delaware because the laws are the clearest there, and there's all this infrastructure set up to make it work really efficiently and smoothly. Wyoming wants to do that for DAOs. And so they created this new law and this new entity type called the DUNA, as you said, the Decentralized Unincorporated Nonprofit Association. And they are telling everyone in the industry who wants to set up some type of decentralized autonomous organization, come to Wyoming. You can register it here. And by registering it here, you will get all these benefits that the unwrapped DAO does not have. You will get limited liability. You will get legal personhood, so you can pay your taxes and you can, sign contracts and you can hire employees or, contractors and things like that. And we will make sure that the law is clear here. We're trying to do the same thing at the federal level with the United States. And this is where you hear President-elect Trump say he wants America to be the crypto capital of the world. So just like Wyoming wants to be the Delaware of crypto, the United States wants to make sure that the US is where all crypto companies want to come to set up their companies and do business and hire employees, right, to create jobs and also pay taxes. So we'll have to see if we can make that happen in the next couple of years.
Yeah, you've got your work cut out for you in the next couple of years. So I feel like this has been a series of very big questions, but to maybe take the next pivot from where we are, if we're talking to a founder who's in the early stages of architecting and building what they're working on, we don't need to get into the specifics, but I think the high-level architecture that we've converged on in some ways is to have a global, credibly neutral protocol that is really a market for bringing together different users and service providers in a way that doesn't kind of privilege any of them. And maybe there are more opinionated products built on top of that protocol that allow provide a really good user experience or a more opinionated way to interface with this underlying kind of network. And we kind of see this in DeFi, in social networks, in all sorts of kind of verticals. So, this is something we could obviously spend another 2 hours just talking about this, and also giving the caveat that this is not legal advice and people should kind of get their own specific counsel around this. But if you were going to kind of sketch how how someone, a founder in that position, should update their mental models or kind of like plant seeds of what they should go and look into, what would you say to them?
Well, first, thanks for front running my disclaimer because I do have to give that. I'm a lawyer. I'm not your lawyer or anyone listening, so none of this is intended as legal advice. But this is what I do, every day at Variant, talking to founders to help them understand legal and regulatory strategy and connect them with lawyers who can do the work on the ground to help them make sure they get it right. So this is what I love. So I'll give you a sense of what those conversations sound like. First, the most important thing, I think, is for founders not to compromise on the product or the service or the protocol that they want to build. And I think the mistake that a lot of founders make is they assume that whatever the current industry standard is the only way to do it, right? So like set up your Delaware C Corp, create a Cayman Foundation, have some fake decentralized governance theater so that you can launch the token from the foundation. The first thing to do is to rethink, as you said earlier, from first principles. What is it that you want to build? And then bring in the lawyers or, someone like me to discuss from a design perspective, how can we make sure that this product or service in its best version is compliant with the law? And often there are compromises that have to get made down the road, but you start from what is the best version of this product or service, and then you work from there. Now, then you do have to start thinking about some of the big legal and regulatory issues that founders tend to face. And the first one, especially in the last few years, has been, are there any securities laws that will apply to this product or service, right? Typically, this is, you're going to launch a token. Is the token going to be viewed as a security? Or is the transaction in which the token is distributed going to be viewed as a securities transaction? This leads us to talk about the Howey test and investment contracts and all that good stuff. But that's sort of where you start when it comes to tokens. Then you look at other types of products like a front-end interface, right? A web app or some other type of application that allows users to interact with an underlying protocol. Is that service regulated as, for example, a broker service that the securities laws might apply to? And how can you adjust the various parameters of that front end in order to make sure it doesn't look like a broker? And, just to give an example, although there are dozens of examples of regulatory issues like this, it is more likely that a front-end interface will be viewed as a broker if it is making decisions on behalf of the user about where a trade is going to be executed or at what price. And if it's taking a fee per transaction, right? If it's not showing to the user information that lets the user make their own decision, well, then if some of the tokens that are involved in the transaction are viewed as securities, well, now all of a sudden, even if that company didn't launch its own token, it still might be running afoul of the securities laws. So then we talk about how can you structure this product or service in a way that gives you the best argument that the law doesn't apply. There's all sorts of other types of regulatory frameworks that apply as well. And so you have to sort of tick through all of them to figure out, is there a way that I can either affirmatively comply with this regulation, right? I have to, register with some government entity, or I have to make some disclosure. But then if I do that, then I've satisfied whatever the regulatory obligations are. Or can I not do that? Or is it too expensive to do that? So I have to change the product in some way to make sure the law doesn't apply at all. And that's sort of the process that you go through. At the end of the day, you might find neither of those work, right? You can't comply affirmatively, it's too expensive, or it's too difficult, or the product literally can't function in the way that the regulations designed for traditional finance would force it to function. And you don't want to change it so much that, it's not going to be subject to whatever that regulation is. It's not interesting anymore to launch that, unregulated version of the product. Then you have to talk about geofencing, right? Where you just say, we're going to throw our hands up in the air. There's no other way for us to navigate this regulatory risk. We're just going to block the United States or some other jurisdiction so we don't have to think about what it would mean to offer the product or service in that location. So that's all the sort of regulatory questions. After you talk through the regulatory questions, and the last thing I'll add here, you have to look at the non-regulatory legal issues. And so many people forget about this, right? We get so focused on what is the SEC going to think? What's the CFTC going to think? We forget, what is the private plaintiff's litigator going to think? And are they going to go find some person who wants to sue me in a class action because they think I'm deep pockets, and they find some, technical issue that the government wouldn't care about, but that they can make money on? Or what happens when some user of this protocol loses money because they're trading meme coins, and when you trade meme coins, you might just lose some money, and they want to come after me because they made a bad investment decision. And this is where you have to think about really basic stuff like, do you have terms of service on your front-end interface? And are those terms of service adequately protecting you from that type of private lawsuit? Is it enforceable, right? Did the user have to click a box to accept the terms and conditions, which probably means it's enforceable, although again, not legal advice? Or is it just like buried somewhere on the website, but the user never actually saw it, and so you can't prove that they're bound by those terms of service? Really basic things like this that I think new founders just don't really think about, but that are so crucial to get right in the first instance. So those are the types of things that we think about in those early days of product design and development.
Mm-hmm, mm-hmm. Yeah, that's a really good kind of overall review of everything. And I think that kind of deeper meta point is that the legal design is a big part of how you think about architecting your product and protocol, and to really front load it in the beginning and kind of think of them as interwoven parallel threads that you're making progress on, and involve kind of counsel from the very beginning.
Yes, it's super important. And let me add two thoughts just to drive home how important that is. First of all, I always tell founders, you should imagine that you are going to be the biggest company in the world, right? Otherwise, why are you bothering founding this company? So you should be planning in 5 years or 10 years to be having really difficult conversations with regulators, because you will be unavoidably successful. And so people will be looking at you and asking questions about what you were doing in the earliest days of the creation of the company. So you should be in that mindset right now, or else why are you bothering in the first place? The second thing is, it is really important to get lawyers involved early. And I think most founders hear that and think, I don't want to talk to lawyers. Lawyers are no people. They're just going to tell me I can't do what I want to do. And that is true about bad lawyers, right? But good lawyers aren't no people. Good lawyers are yes and people. They will tell you, yes, you can do this thing you want to do, and here's a way that you can make it less risky, or here's a way that you can make it more efficient or more effective. And getting good lawyers involved early, not as just a, box checking exercise of how do you figure out regulatory compliance, but really as thought partners to look at these issues from a different perspective. I think it's absolutely crucial to making sure that products and services are designed the right way from the start, so you don't go down the wrong path, waste a ton of engineering cycles on something that ultimately gets blocked by legal because you didn't get them involved in the first instance. And then I guess the last thing I would add is, you do have to take a risk-adjusted approach to this kind of work. And, people think that lawyers are, too slow and too expensive, and often that's true. But good lawyers understand how much work and how much money is worth spending, especially before a company reaches product market fit, right? A lot of lawyers will tell you, the only way to do it is the right way. And the right way is $1 million and 6 months of analysis. And it's like, why are you going to bother doing that before you even know if there's any product market fit behind this? And so a good lawyer will help you understand, what are the biggest risks here? How can you mitigate those risks? And then how can you get the product into market quickly so you can find out if you've even got something here? And then how do you backfill the rest of that legal work down the road to put yourself in the best position to have those tough conversations with the regulators? So this is really all a way of saying, you've got to work with lawyers. You just got to make sure you have good lawyers. And that's something that I love helping founders, find to make sure that they're getting the best advice.
Mm-hmm. Yeah, very true. Well, I know we've been talking for some time. I think maybe as a way to wind down and to maybe close on a more personal note, it's clear from everything you're sharing that, I mean, one, you've been around for a really long time through a lot of ups and downs and pain and difficulty, and also kind of I kind of like get the feeling that you're kind of like deeply connected with the why of like why we're doing all of this in the first place. And this is kind of prompted also by my brief chat with Jesse Walden before the conversation, where I was asking him, what should I ask Jake about? And he said to kind of get into your personal motivation. So I'm curious, like, why do you care about all of this? And also, what is kind of like more of your personal story leading into all of this over the years?
Sure. I mean, I love crypto, man. I just love this. I just can't imagine doing anything else. I guess part of it is I'm in so many ways a child of the internet. I grew up in the 90s. I grew up when the internet was super weird, and just sort of loved being immersed in that culture. And I feel like so many of us have felt the same way, that over the course of the last 10 or 15 years, the internet sort of stopped being weird and it stopped being as fun. And there's a lot of reasons for that, but I really think the main reason is that the internet got captured by a few very large companies that were out for themselves and not for the people they're supposed to serve. And I think crypto is the answer to that. I think the internet's broken, and I think that crypto is the way to fix it. And personally, I want to do everything I can to, deploy my skill set, as a lawyer and as a policy professional to help make that happen. I also just am a technologist at heart, and there's nothing to me that's more sort of exciting and motivating than an engineer who has a brilliant idea, and the optimism, even sometimes the naive optimism, that they can change the world. And being of service to those people, and especially when they've encountered so many lawyers who are not of service to them, right? Who make them feel not heard and not seen. I love being able to sort of provide a different perspective for them. And so I just love that. In terms of my background, a lot of what got me to this point is, as a young lawyer, I did a lot of work in financial regulation. So I started my career right after the global financial crisis. And I saw the consequence of that for a lot of my friends and peers and friends' families and all that. And ended up at a very large law firm, very corporate environment, doing a mix of compliance and investigations and litigation. A lot of it on behalf of very large Fortune 500 financial institutions. And I saw, I guess I'd say, like, how the sausage was made in the financial system. And at the same time, I had been and still am very focused on criminal defense and the rights of individuals who are accused by the government and who the government threatens with the deprivation of their liberty. And what I saw basically was a financial system that was designed to victimize the people who were using it, and also set up to act as this dragnet of financial surveillance, so that the government could decide who the bad people were and then go and get them. And again, I view crypto as a solution to that problem. And so initially, I got interested in crypto totally as a personal passion. I never thought that I was going to be working in this industry. But the more I got into it, I realized that there was a real need for lawyers. And really how I got into it was on Twitter. And I was just on Twitter because everyone was on crypto Twitter, right? This is like 2017, and everyone's talking about, what's going on in the space. And I saw all these questions that founders were asking, and other, VIPs, I would say, in the industry were asking about legal issues. and no lawyers answering any of them because lawyers are, very afraid of being wrong in public. And I was like, well, maybe I can help. And so I just started answering. And that's sort of how I viewed my my path through crypto, right? Is sort of find where people need help with this very difficult to understand set of issues, and then jump in and help. And I'm very privileged now, having had the experience at Compound of helping to launch a product and be very close to the metal. And then, having been at the Blockchain Association and really seeing how government works and having, I think, a pretty good sense of where we're going from here. Very privileged to be working with Jesse at Variant to try to help, founders in our portfolio navigate this mess and try to launch products that'll change the world.
Mm-hmm. And there's so much more I would love to get into, but to be mindful of time, I think let's close here this time around, and hopefully we can do a round 2 in the future.
Sounds great.
Thank you so much.
Thank you.
Hey, I have a small ask here. If you've been listening to these conversations and want to support what we're doing here, I would really appreciate if you leave a rating and a review for the podcast. It might seem like a small thing, but it actually makes a big difference to help other people discover the show also. Thank you, and I'll see you again soon.